Hey guys, in this video, we're going to be comparing Fundrise and VNQ and what might make more sense for a new investor who's looking to get exposure to real estate. I have invested in both Fundrise and VNQ, so I feel like I can offer a unique perspective on both these different investments, as well as some of the advantages and disadvantages of investing in both. All right, so without further ado, let's talk about the investment strategy and the structure of both Fundrise and VNQ. So they're both REITs, yes. However, they are different in that they fall under different rules and regulations according to the SEC. Now, before I go in depth about that, really at a high level, all that means is Fundrise is a crowdfunding platform that raises money from investors, and then Fundrise goes out and purchases private real estate. All right. These can be things such as single family homes, multifamily apartment complexes. I've seen them invest into industrial, into development and redevelopment. So Fundrise is a do it for you type of investment where, if you want to get exposure to real estate without having to deal with, the management nightmares or dealing with the 3 T's, the tenants, toilets, and trash, Fundrise might be a good alternative for those who want to invest into real estate without owning rental properties, without saving for down payments, and without dealing with mortgage companies and all that other fun stuff. Now, with VNQ is a REIT ETF. All right. An ETF is an exchange traded fund, so it's traded on the stock exchange. All right. Fundrise is not traded on the stock exchange. So VNQ is a REIT ETF. All right. It holds a basket of 200 plus different equity REITs and mortgage REITs. All right. The equity REITs are companies similar to Fundrise. They go out and purchase income producing assets like multifamily apartment buildings, single family homes, industrial, cell towers, data centers. There's even some that buy casinos and cannabis real estate. And there's, even some that do data centers. All right. So there's a huge, broad range of different equity REITs, and they all have their own kind of niche that they invest into. All right. Then you also have mortgage REITs, and mortgage REITs, or MREITs as they're called. These are companies that create loans for REITs and for individuals or companies, right? And these, individuals, companies, or REITs will go out and purchase real estate. These mortgage REITs, they make their money off the interest payments as well as the fees associated with generating loans. All right. So that's the difference between equity REITs and mortgage REITs. So I will say, as an investor who started investing in both of these, they're easy to sign up for. They're easy to get into, but they have different, again, advantages and disadvantages. So with Fundrise, all you do is go to fundrise.com, and I'm not sponsored by them, but you go to fundrise.com, you create an account, you connect your bank account, and you can start investing, today in 10 minutes, right? But the difference is they have two different fund strategies, right? They have the income strategy or the long-term growth strategy. And both of these strategies, fit differently, right, for the individual investor. If the individual investor is prioritizing income, then they're going to obviously invest in the income portfolio, right? If they're prioritizing long-term growth, not so much focusing on the dividend, then they'll probably go with the long-term strategy that Fundrise offers. All right. Whereas with VNQ, you're going to get the dividend straight up. You're going to get a dividend. I think right now it's sitting at like 3.5, 3.6% yield. And you're also going to get capital appreciation if VNQ goes up in share price. All right. That's also the difference between, VNQ and Fundrise, because anything in the stock market is volatile. So it's going to go up and down. It's going to have ebbs and flows. And, during the pandemic, VNQ in the real estate investment trust market pretty much dipped substantially, just like everything else. And because the interest rate has been so elevated for the last couple of years, the entire REIT industry the publicly traded REIT industry has been, really feeling that pinch. But now that rates are starting to come down, REITs are starting to recover. So what kind of, how does this like really help you as an investor? What makes sense for you? All right. So when you invest into Fundrise, you're not going to be able to access that money in a pinch, right? So let's pretend you invest into Fundrise and you invest $1,000, right? Or even $100, right? In order to get that money out in case you really need it, say you have an emergency come up, or say you need to move that money into a different investment or whatever else, it's going to take almost 3 months to get that money out. And you may not even get it all out at once, right? I had a substantial amount in Fundrise. I had about $30,000, if I remember correctly. And to get it all out took me about 3 months to get pretty much a lump sum payment of all of that. And then, of course, I had to pay taxes on capital gains and all that other fun stuff. But, it was not quick, because when you invest into Fundrise, you're investing into an illiquid asset class, right? You're investing into real estate. It's as if you're investing directly into real estate itself, because if you're to purchase a house, a rental property, and you try to sell it tomorrow, it's not exactly going to happen at the click of a button, right? You can't click sell and then get your money out. So just keep that in mind, that with Fundrise, if you invest into Fundrise, the money you put into it is very illiquid. Now, with VNQ, it's completely different. When you invest into VNQ, because it is a REIT ETF, it is traded on the stock exchange. As soon as you hit sell, you'll be able to get your money out immediately, right? So it's very highly liquid, all right? And that is, I think, an advantage for VNQ. However, the advantage for Fundrise is that it's not going to fluctuate. It's not as volatile, and it's not tied to the stock market. So if VNQ takes, a 10% dip, a 5% dip, whatever it is, Fundrise is not going to do that. Fundrise they don't publish their NAV every single day, every single second, every single minute, every single hour like VNQ does, right? People are not buying and selling and trading Fundrise. So there's a benefit to Fundrise as well, because, people are emotional, and people will sell out of things at, a heartbeat because they see it drop down, so that could be a problem for people who invest in a VNQ. But with Fundrise, your money is pretty much stable. For the most part, it's not tied to the stock market. So you're not going to see or experience those really massive dips, all at once. So again, just something to think about there. Again, when you're investing into Fundrise or VNQ, you have to have kind of a long-term mindset. Fundrise really, really hammers this point home, that whenever you invest into Fundrise, you need to have that long-term mindset, right? You need to treat this as if it's real estate, which it is. It's indirect ownership into private real estate, right? So, you want to invest with the idea that your money is going to be locked up or tied up for a long time. You have to think in probably 5 to 10 years, right? When I first started investing into Fundrise, I believe it was in 2018. So around 2022 to 2023, I believe, is when I withdrew all my money. And I withdrew, thankfully, at a gain. So with VNQ, again, you want to have kind of that long-term mindset as well, because with anything, especially in the stock market, with anything, you want to give it time to grow and compound over time, right? So VNQ, you have instant diversification when you invest into it. You're going to have investments in 200 different companies, and they're all investing in several different types of income properties, right? You don't have to pick and choose which ones you want to invest in. It automatically does it for you. So if there's a REIT that doesn't meet the criteria, it'll kick it out. The ETF will just remove that single stock or that single REIT and then replace it with a new one, right? It's very efficient. You don't have to do anything for it. The beauty of both Fundrise and VNQ is that they're both passive, right? You're not managing any rental properties. You're not managing any tenants. You're not managing any day-to-day operations. These are completely passive investments, which is a huge plus in my book, right? But really what it comes down to is what makes sense for you as the investor, right? What makes sense for you, your time horizon, and your risk, right? If you want to be able to take money out fast in case you need it in an emergency, VNQ might make more sense for you. If you want to stick with it, keep the money in, invested for at least 5 to 10 years, let it compound over time, let it grow over time, then Fundrise might be a good alternative for you. Now, the fees associated with both are completely different as well. And you guys know me, I'm not a big guy on fees. I do not like, ETFs or any type of investment with high fees. And this is no exception. When you invest into Fundrise, they have a 1% fee And that 1% covers a 0.85% asset management fee because they're the ones managing all the properties. So, they have to charge a high, asset management fee, but they also charge a 15% advisory fee. All right. On top of that. So they're charging you 1%. 1% could be the difference between a $5,000, fee over the cost or over the life of the investment, or $75,000 over the life of the investment. It really all depends. Now with Vanguard's, REIT ETF VNQ, you're only going to be paying a fee, an expense ratio of 0.12%, right? That is substantially low, or at least lower than if you were to invest into Fundrise. And again, these expense ratios, these fees, they can add up. So it's something you always want to be cognizant of, but it's something you also want to think about as well, because, how much management is going into, managing these things, from their side, and then from you as a passive investor, how much are you willing to pay for that, right? Because if you're investing in individual REITs, you would have to be picking and choosing, you would have to be adding and removing, you would have to be monitoring, so again, it's give and take in this, in this instance. So those are really kind of the differences between the two and how you should look at it as an investor, kind of the advantages and disadvantages of Fundrise to VNQ. I invested in both, and I actually ended up selling out of both for various different reasons. I'm not saying they're bad investments. All right. That I'm actually contrary to that. I'm investing in individual REITs because I like the management. I like the control of my own portfolio. I was investing into Fundrise and I was investing into individual REITs at the same time. But when I have companies, I'll give you an example. When I have a REIT like Avalon Bay Communities, ticker AVB, that invests in multifamily apartment complexes across the United States, then what's the point of having Fundrise, right? Fundrise also invests in multifamily apartments. I also invest in another REIT called Invitation Homes, ticker INVH. Now, if they're investing in single family homes, what makes sense for Fundrise? Why would I have money tied up in Fundrise if I'm investing into a REIT that's doing that anyways? So I had to compare the two, and really think about this a little more longer term, because I was spreading my money thin. I was investing in different pots. I was investing in Fundrise, I was investing in the VNQ, and I was investing into REITs, so I had to really think, like, does that make sense for me to have all these, to have all this money going into these different pockets, these different buckets, so at one point I decided, just to consolidate everything. And that's what I ended up with, was investing into individual REITs. But I wouldn't say that individual REITs are the best way forward. I would definitely advise that, if, there's or recommend rather, if an investor wants to invest into real estate and get exposure to real estate, consider VNQ or consider Fundrise. And depending on your risk tolerance, your time horizon, and what you want, whether you want an illiquid asset or a liquid asset, go with Fundrise or VNQ. All right. Each has their own unique advantages and disadvantages, right? So I can't give you a answer of what to specifically invest in. You gotta come to your own conclusions there. All right, so I hope this video was useful for you. Just a quick plug. If you guys like this type of content, please let me know down below. I also have a Skool community. I'll put a link down below in the description. All right, I will see you guys in the next video.